Conagra Brands is down 43%. They make Healthy Choice, Slim Jim, Bird's Eye, Marie Callender's, Reddi-wip, brands you've eaten this month and probably this week. The market has decided their business is dying. Ozempic is suppressing appetite. Private label is taking shelf space. The debt from a 2018 acquisition is still on the books. Last Tuesday, two of the most experienced operators in American packaged food bought $600,000 of the stock. Conagra owns around 40 brands. Pictured are just some of them. They trade under the ticker CAG, and most people have never heard of the company, but you've likely eaten their food. The first buy was Richard Lenny, 25,000 shares at $14.34, $358,000 of his own money in a single day. Lenny ran Hershey for 6 years. He took over in 2001 when the company was in trouble. A botched ERP rollout, costs out of control, a stock that had flatlined for half a decade, and by the time he left, Hershey had outperformed the S&P by a wide margin. He did it with the unglamorous work, closing plants, consolidating SKUs, defending the core brands. He's been on Conagra's board for years. He's seen every internal forecast, every retailer negotiation, and every miss. And after watching the stock lose half its value, he wrote a personal check for over $1/3 to buy even more. John Mulligan, same day, 17,500 shares, $250,000. Mulligan spent over 30 years at Target. He was their CFO, he was their COO, and when the 2013 data breach forced a leadership change, the board put him in as interim CEO. Mulligan isn't just a retail executive. He's one of the small handful of people alive who has sat at the top of American big box retail and watched in real time which packaged food brands sell through and which ones don't. Weekly velocity, shelf turn, promo response. He's seen all of it, and he just bought $250,000 of Conagra. So, what do they see? The valuation has gotten cheap. The dividend yields over 7%. The Pinnacle debt is finally rolling off the balance sheet, and the GLP-1 narrative is probably overpriced. The data shows most people who start the drugs discontinue within a year, and by month 12, 68% of starters have stopped. Insiders are not oracles. The bear case is real. Private label may be structurally better than it was a generation ago. GLP-1 adoption could inflect upward. The remaining debt still constrains capital return. But here's the asymmetry. If the bears are right, this stock is cheap and stays cheap. If Lenny and Mulligan are right, the buyers at $14 will look obvious in retrospect. Conagra won't be exciting, it won't be 10x, it won't make anyone a meme. But two of the most experienced operators in the history of American packaged food just told you with their own wallets that the stock at $14 is worth owning. That's not a recommendation, it's a question. This video is for informational and educational purposes only and does not constitute investment advice. InsiderCompass is not a broker-dealer or registered investment advisor. Data is sourced from public SEC Form 4 filings. Insider activity does not guarantee future performance. Always do your own research.